Our final session for the day is Reforming Foreign Portfolio Investment Access for the Next Decade. And our illustrious panelists are here amongst us, and I take the privilege welcoming them. We have in our presence Mr. Janak Dalal, Head of Security Services, Deutsche Bank, Ms. Kaku Nakhate, Chief Executive Officer, India, Bank of America. We have Mr. Simon Williams, Managing Director, APAC, ex-Japan, Head of Government Affairs and Public Policy, BlackRock. And moderating this session is Ms. Aparna, Thyagarajan, Chief General Manager, Securities and Exchange Board of India. Welcome, ladies and gentlemen. Please do take a seat. Ladies and gentlemen, those of you in the audience attending this session, I urge you to kindly take your seats at the earliest so that we can commence with this session without any disruptions. And with this, I would like to hand over to Ms. Aparna Thyagarajan, ma'am, to kindly take the session forward.
Thank you. So it's been a long day, and looking forward to see attention from the audience as well. Is there going to be a break now, or do we get started? It's fine. Sure. Thank you. Good evening, ladies and gentlemen. Very warm welcome to my esteemed panelists at this session. It's my honor to introduce them to all of you today. First off, we have with us Mr. Simon Williams from BlackRock Asset Management. Simon is Head of Government Affairs and Public Policy for BlackRock's APAC region ex-Japan. BlackRock engages with global policymakers and regulators to help address policy issues in financial services. As part of his role at BlackRock, Simon has been a key collaborator for SEBI in offering data-driven policy inputs from a foreign institutional investors and asset managers perspective. So, welcome, Simon. Next up is Mr. Janak Dalal. Janak is the Head of Trust and Securities Services for India and Sri Lanka and co-head of the corporate bank, Deutsche Bank India. He brings with him 29 years of experience with deep expertise in capital markets and a well-established global network both internally and externally. Over the past 17 plus years with Deutsche Bank, Janak has held several leadership positions across the organization. Welcome, Janak. And to add further perspective on this topic that we have at the session today is Ms. Kaku Nakhate, CEO of Bank of America, NA. With nearly 3 decades of experience, Kaku is an industry veteran with deep insights and knowledge of India's growing banking and financial services sector. Her rich international experience cuts across major corporates, financial institutions, and markets. Thanks to each of you for joining us today at the session today. Let me start the session with a quick overview of how we've seen the FPI fund flows over the recent past, and maybe a quick summary of the ease of doing business measures that SEBI has put in place for foreign portfolio investors, post which we could get started on the discussion points that we have lined up for today. If you look at the FPI investment trends that we have seen, the global investment landscape that we see today is largely driven by various uncertain factors like trade tariffs, geopolitical developments that really reshape the global new norm and the global order. And then we have all the trade tariff news developments that come on quite regularly. But if you look at the investment trends, those are again largely driven by topical developments. They have been rather volatile, if I can put it that way. But if you look at the FPI holdings, the assets under custody that foreign portfolio investors have held in the Indian markets, historically, there is a data point that I'd like to present here. As of September 2025, FPIs have held 77 trillion INR assets in India. So that's about 870 billion US dollars. Compare this figure with the FPI AUC sometime pre-COVID around July 2019. This same number stood at about 28 trillion INR. So that's about a 3 times increase of the assets under holding within a span of 6 years, about 18% CAGR over the 6-year period. So while the incremental flows have rather been, largely driven by global developments and very, very topical, measures that happen over a shorter period of time, I think over the long run, assets under custody and the holdings that FPIs have really parked and have looked at India as a market, it is rather a positive story. On the macros front, India stands resilient with its strong growth potential and robust foreign exchange reserves with comfortable balance of payments. Our public digital infrastructure is certainly a global benchmark. If you look at the way SEBI and the regulatory landscape look at foreign portfolio investors, it's really been a win-win story. So from the regulator's side, we look at FPIs as active contributors to the India story, where they come in and deepen our capital markets and participate in this journey towards sustainable capital formation. Likewise, from the investor's perspective, again, this has been they look at India as a destination where, if you look at the data again here suggests that since 1990s, when India opened up the markets for FPIs, we've seen about 10% dollar-denominated return over the period of time. So they look at India as a market where they have had returns and again contributing to the India story. So it's really been a win-win both from the SEBI and the market side and from the investors' perspective. Of late, we've initiated a host of ease of doing business measures to really ensure that FPIs are able to participate in a very streamlined manner with optimal cost of operations as well. If I can just touch upon few measures that we have done on this regard. To go with the Swagat approach to foreign portfolio investors, where SEBI had notified a policy that again recently was approved by the board, where we went with a risk-based approach and we've proposed a very, I would say, a framework where large regulated public retail funds, pension funds, sovereign wealth funds are all able to access the market and have, and again, an access to a wider asset class as against what they would have otherwise had as FPIs. So we are basically unifying the channels of foreign investment for certain large regulated FPIs where they get access. It is more like a diplomatic passport where you have an access to a larger asset class and are able to trade in a unified, basically you get a unified investing experience when you access the Indian markets. So this is again something which is going to be rolled out very shortly by SEBI. Likewise, we had announced a light-touch regulatory framework for FPIs who transact exclusively only in government securities. Again, the context here is all the interest that India has seen as a market with the Indian government bonds getting included in the large global bond indices. We've had a lot of traction with respect to the investment in the sovereign bonds, and therefore there has been a light touch framework that's been put out for FPIs who do only IGB. The launch of the India Market Access is again a good example of how we really follow a user-centric approach where we try and put out all the relevant information that an investor would look at one central place. Therefore, you ensure that there is complete symmetry of information for all trading participants at one go. So these are all measures that we have done to really make life easier while they stay invested and operate in the country. From a market infrastructure perspective, again, a host of measures have been put out. I think we all saw the implementation of the common contract note, which aims achieving price efficiency for FPIs. Likewise, there are consultations underway with respect to the review of block trading mechanism. There is a consultation that's underway with respect to introduction of a closing auction session for the Indian markets. I think all these are infrastructure initiatives which will go a long way from an investor's perspective. Getting started on the discussions, maybe I would just talk about the larger agenda that India, and the government has been steering towards a Viksit Bharat by 2047, which really means that we aim to achieve a developed country status by 2047. So while SEBI has really initiated some steps towards how we can achieve, encourage flows from long-term investors like the pensions and the sovereign wealth funds and government funds, all of them. What more could SEBI do to really bring in increased interest from these long-term investors? Janak, maybe if I could just go with you first.
Hello. Thank you for inviting me, Aparna, and also GFF. So coming to the question, I mean, one of the things is attracting investors is market access. So its processes, its functions, its array of asset classes that we offer to foreign investors. Also, a transparent and consistent market or regulatory regime, which I think we already have via SEBI. As you mean, one of the things that you mentioned is also we should talk about a SWAGAT, the FI, single window automation and generalization access for trusted foreign investors. That will actually help ease of doing business and actually the ongoing regulatory measurements which basically will help us for our long-term funds. We will always see pockets of short-term investors coming in, but our focus, which help with the long term, is through digitization. I mean, one of the best examples I can talk about is the KRA process. Our KRA process platform basically allows foreign investors to access this platform and also control the amount of data that can be shared. I mean, this is something that SEBI has done phenomenally. Additionally, I mean, given how complex our markets are being an ID market, I think SEBI has taken the forefront in actually stabilizing constant communication with MIs, with custodian banks, with other participants to make sure that we are constantly reviewing these processes, removing redundant processes, and streamlining processes as much as possible. So standardization, transparency is very, very key to having long-term investments and actually achieving our goal towards Viksit Bharat. I mean, one of the things, I mean, I'll be amiss if I don't mention, in terms of today's geopolitical pressures that we face, not only welcoming foreign investors is important, we should also focus on our domestic and institutional investors. That balance between both of them who complement each other will actually create a much more stable market infrastructure for our participants and actually help us achieve the goal of 2047 Viksit Bharat. Thank you.
Thank you, Janak. Thank you for your insights. Kaku, would you like to add as well?
Thanks, Aparna, for having me here, and thanks, GFF, for such a great thing. You know, I'd just like to give a different perspective in line with what Janak said. See, India has come a long way in terms of SEBI's done a lot to ensure transparency, confidence, mutual trust, and predictability in policy over many years. If I remember when I used to trade in around 2000, FPIs really were the ones which, told whether the markets are going up or markets are going down. And now if you really see with SEBI steer, and again the growth of the capital markets and the steer to get retail monies into mutual funds, today we are proud to say, and as you mentioned earlier, that 870 billion was actually the mutual fund money in dollar terms that is there. And actually the FPI money, which was around $1 trillion in last September 2024, is now at around 810-20 billion into the markets. So clearly creating a balance. So it looks a very good thing that onshore and offshore is balanced. But with a different lens when you see, are we getting enough as a market? Because if Viksit Bharat has to be there, you need to have financing to aid the growth for the economy. And we need to attract all pools of capital to come to the economy. And today when I look at last year, there was, and Simon has been one of the biggest attractor of funds globally, but if I may say, 100 trillion is the investable funds, in international markets, funds raised in the US. And if you really see, if 100 trillion is there, we are getting less than 1%. And our global GDP we are 4% of the global GDP. So we are really not getting our due share. So we need to move a step further if you want to become the third largest economy. So the few funds that I think with SEBI steer and reforms and creating a regulatory setup, we should attract multi-asset funds. And they've become very, very popular now. So if you really see, multi-assets is debt, equity, gold, commodities, REITs. And many of these are already prevalent. And then you have some private credit included depending, and infrastructure funds depending. But this is a big pool which we are not really attracting enough. India started in a small way. We're 9 billion roughly, but there is a lot more. And second, I would just add to it two other things. One is on infrastructure funds. Globally, everywhere, everybody started investing in infrastructure. It's also creating jobs. So that funds have gone from 2016, from 500 billion to around 1.5 trillion. And again, India has got much lower share, but the tap has begun. And global funds have started thinking they can invest in infrastructure. InvITs is a big thing, but there could be other methods of bringing. And finally, private credit. That's become very important. And from private credit point of view, again, it is expected from 1.5 trillion today to go to around 3 trillion by 2030. And we need to do enough to really open these markets and have risk-based approach to allow funds to go there. So those are the few things I'd like to highlight.
I totally agree. I think all valid points. I think SEBI's one move towards this, and maybe a first baby step in this direction, is to really collapse at least the SEBI's products from an FVCI perspective. By the way, even if you look at the alternatives investment, about 40% of the investment are from foreign investors. So again, that is a healthy bucket which, again, these are all boundaries that we probably have, put as fences in our realm of things. But for an investor, it is just India as an investment destination. So just to the very fact on how can you unify the investing experience was one question that we had asked ourselves when we had, come up with the policy. Yes, at least the SEBI routes have really been collapsed. But yes, there is more to be done. And, maybe we could look at life beyond the SEBI products. We are in touch with what we could do to really take this up and potentially include it over other schedules of the non-debt investment rules, through which, again, foreign investment could come in. And again, Janak, thank you for your points on standardization. Very relevant. Just to add here, I think the DDP custodians industry, we've been key collaborators with us, where we have worked through the CDSS of the Standards Forum on multiple projects, all aimed towards achieving standardization of practices across market participants. That way, I think the whole approach of an implementation standards forum and really get into the nuts and bolts of any policy and do a lot of ground level work, which will kind of achieve that interpretation at a very, very, uniform level across market is very key. That is something which is certainly on our mind on all policies, not just FPIs, but even otherwise as an approach in policy making at SEBI. Thank you. Simon, moving on. So from a global asset manager's perspective, we keep saying, so firstly, India is in that sense, we are an ID market where we have registration and, investor identification as a mandatory requirement. We have chosen to not follow the omnibus route, which is largely what the Western markets follow. We are a segregated market structure in that sense, and therefore are often accused of being very, very document intensive. But, from obviously, we are not the only one. There are other markets like Korea and Taiwan, which are, again, ID markets. So is there any global best practice that we can learn from? Is there anything that, perhaps FATF allows, but India has still not adopted? Is there anything that we can given, even knowing the constraints that we have in respect of being an ID market or being a segregated market structure that we have chosen, how can we really ease the onboarding from an investor's perspective? And just to follow up on that, how can we leverage technology as one tool towards offering an enhanced onboarding experience for our FPIs?
Aparna, thank you very much for the question, and thank you very much for inviting me here today. And it's great to be on this panel today. And also great to see so many friends that I've been working with in India for so long being in the audience today. So good to see you too. Look, there's lots of questions there and lots of things to kind of go through. But first of all, I just want to kind of highlight why we're all here. All governments, are looking to kind of create stable, long-term investment, and India is definitely on that path and very, very focused on that. And of course, we're all looking overall to kind of share that prosperity across our broadly across our populations and things like that. So, Kaku's point about the kind of percentage of the total investment dollar coming into markets in India is a big focus for that. I just wanted to kind of pick up just one quick thing from the discussions before. I hear a lot. I've been looking at trading India and being involved from a policy perspective for the last 25 years. But one thing which I hear quite often is, oh, this strategy would love to have an Indian company in there and it would love to be a core part of it. However, it's a little bit hard. I don't know when my account is going to be set up, so I'm going to try and invest in other parts of the market, maybe in Europe or elsewhere beforehand. So don't get me wrong, the focus over the last few years has been to address that, and I think FPIs on the whole should be very, very thankful for that and really appreciate all the outreach that has occurred and the listening. But there is still more for us all to do to kind of come up with ideas and think about how we're going to solve that. So probably getting back to the question that you're asking in terms of things for the future. Look, I think it's incredibly interesting. FPIs on the whole, I think just want fair, flexible access to the market. I don't think that's unreasonable to ask for anything more than that. I think this is the market in which we're choosing to invest. It's important to understand the rules of why the market's been set up the way it is. India is a segregated market. Many markets are segregated markets around the world, and probably in the future with blockchain and the like, a lot of other markets will be segregated in the future as well, because technology will allow that to be the case without probably impacting the ability to invest successfully in the market. It just is that it's been harder while the technology has been what it is. So, things to kind of think about for the future and try to minimize, I suppose, an investor thinking, I'm going to put off India until later, until I've got everything else sorted in my investment strategy. Is around kind of, I always kind of say, it's probably about 5 points I've been thinking about. And Aparna, you'll know this one very well, the digitalization and the ability to kind of, utilize a trusted central source for signing documents and things like that. I think as it relates to the KYC process and the centralized KRA, I hear not just from FPIs, but brokers and probably many other people in the chain as well, that it would be great to be able to kind of really streamline that process, utilize potentially on-chain technologies to be able to kind of use multiple centers of excellence there to verify those documents and be trusted across the whole ecosystem. I think having kind of FPIs and their custodians, who obviously are representing the FPIs in the country, access to put in their documents and store them there effectively, and it all being trusted in a central source, will create a huge amount of efficiencies. It will also highlight and solve a lot of privacy issues. We heard on earlier panels about, we nowadays are putting a lot of trust in systems in terms of our KYC, and it's important that it is done so that way. But the information that a regulator like SEBI needs to see versus what a broker needs to see is different. A broker just needs to trust that the work has been done. So let's kind of try and work towards that. I'm sure those will be very good solutions for the future. Of course, standardization is required in order to kind of make that happen. You know, we're thinking about standardization, I suppose, in the broader kind of Swagat thoughts and associations, but that will obviously take time to implement. But that would obviously help in terms of with respect to kind of interpretations and the difficulties in terms of trying to kind of ensure that we're all on the same page in the systems. And, you know, we would like to see that those are working well. There are a couple initiatives out there. There's the EU Digital Wallet and the UAE Pass that I think are aspects that are worth considering in terms of like how to kind of centralize that. But obviously India needs to kind of brainstorm with all its, you know, many MIs and participants to work out what's going to work here. I think one other area that I really would like to see, you know, I'd like to see in the next 10 years really kind of solve is centralized depository records. I remember when I first came out to India in '96, just as I started the industry, I visited the Indian entity of the broker that I was working for at the time and went to their settlements room and saw piles and piles of securities contract certificates getting ready for settlement. And that was quite an eye-opening thing. So thinking just how much market has developed and the fact that we've got so much all digitalized and in DMAT form, but it probably isn't quite far enough. We need to kind of think about how to link up the counterparty knowledge completely and accurately. Korea, for example, uses LEIs nowadays and has found a way to kind of trust that centralized form. And I think something like that would also be worth highlighting here and utilizing in India as well. We've already kind of got the ODI route incorporated into the central depository aspects as well. So the ability to kind of see the full picture of investors is helpful. So I'm hoping that a lot of the challenges that custodians and FPIs have in terms of understanding clubbing and grouping can somewhat be solved by more accurate records and AI, I suppose, to read that more effectively and to come up with suggestions in terms of where to focus the risks. I'm sure that would help dramatically. I think my final kind of thought is, is really around kind of it's not unreasonable to assume that advances in technology, including smart contracts, will remove the necessity of some of the current regulatory burden, but it will equally facilitate more beneficial real-time checks in the market, and the investment process will become, safer, stronger, but less restricted than it has been in the past because the technology will be better. But I'll pass it on.
Sure. Thank you so much. Very useful. I think, as you said, the key behind the whole work on onboarding is to achieve end-to-end digitization. That is definitely, important. In that sense, if we, in fact, discuss internally as well at SEBI, we keep thinking it is still archaic because it is still very, very, a lot of things, for example, digital signature. We've not been, although it's been enabled regulatorily since 2023. We haven't found the technical compatibility with any country, and we've not really been able to head forward on that. But I think we are trying to see if we can, work with the Indian certificate authorities and see how we can go live on that. Maybe things like these will help us achieve, end-to-end digitization of the whole onboarding experience.
Yeah, I mean, just to kind of just quickly add on that, I mean, a lot of other jurisdictions around the world are finding ways to trust digital signatures from other jurisdictions.
Sure.
And of course, there are ways in which to make that work here. We've probably still got to work that out in terms of an Indian perspective, but we're just going to understand the competitive landscape and that kind of aspect for people's dollars. So we've just got to work out how to solve that one.
One thing just to add, I mean, one of the things is now market access portal, enhancing that to reflect real-time status of applications like KYC statuses, renewals, etc., will actually provide FPI with more control. Will actually help us with the ease of onboarding new clients because FPIs want to focus on the strategy, getting into India, not work through all these nuances. Yeah. So those things will actually, and I mean, just to reiterate, standardization again, using international best practices, you mentioned digital signatures, those will actually help us actually attract a lot more FPI money, even though, like Kaku said, it's 1% at this point, but we need to increase that.
Correct. Very true. I think even on the portal part, the way we look at it is, while we have gone ahead with the static version of the portal, which is currently at phase 1, we would ideally want to recreate, like typically how when you log into your banking application in your mobile, it's kind of, as a user, as an FPI, you should be able to view all your holdings, your entire, custodized security details, the next KYC refreshed you, like a dashboard. It should be able to really throw up all the current transactions that you hold with multiple intermediaries. Because, in that sense, there are multiple touch points. You have a trading member account with a broker, a demat account with a DP, the custody account with your custodian, the KRA which is parked, and, kind of put it out at one central place, which the FPI should be able to access. So that is our larger vision of how we would want the India Market Access portal to evolve and provide that one central information, which again will be a credential-based login access will be given to FPIs, but that will really provide at one central place all the transactions from a user perspective. So let's see.
The only addition I would say, given so much work has already been done, and similarly you all had done at the time of KRA, it would be good that while building the portal, RBI and others are also roped in, because as banks, and I'm sure Nitin will agree on custody, they're always bought within, do I follow the SEBI rules or the RBI? And then from an investor perspective, it's always worst of both, right?
True.
So that's just a suggestion. And second thing I just wanted to highlight, the FPI and FDI is now clearly defined, which was not there earlier, and thanks to all the efforts that you all took. It would be worthwhile if a single demat is allowed with an identifier, so people can actually reduce the cost of compliance.
True, I agree. I think that is something. And I can assure you, Kaku, interregulatory dialogue is definitely on. We do touch base with our, other regulator to check what we can do to, achieve an optimum consensus solution towards this. So yes, thank you so much for all the views. Maybe moving on, I'll again come back to market infrastructure. Right? I mean, we've been pioneers in terms of implementing T+1 settlement cycle across the globe. In terms of clearing corporations, we know the resilient architecture that we have put in place. Is there anything more that SEBI or the markets as such could really go for from an FPI's perspective? How do they look at all the infrastructure changes? What more could India do on that front?
So I think we have gone a long way if you really look at it. How many countries in the world can talk about that on the same exchanges they can trade, stocks, bonds, commodities in a way, and ETFs, REITs, InvITs, and now you have also allowed algos to the retail in a proper framework. So actually when I look at multi-asset funds, we have already achieved multi-asset on the exchanges. So I think that can be, easy for even the retail and the AIFs. So today, AIFs have had that. So already you allowed 3, asset classes to be in it. So I think this is a very big infrastructure which we should be proud about. There used to be, and I think Simon was one who earlier pushed us to have common contracts. And finally we got there, though it was over 2 exchanges. Then the clearing was the issue. Now you have a common clearing. So lots has been done. Now I think the next step one could be is, can we do net margining? Can we actually reduce the inflow and outflow of currency? Because there is a huge cost. As a bank, I would hate it because I love foreign exchange, but is it really the right thing to do? And netting could be the second thing. And, you know, looking at margins little more dynamically could be the other thing that I would feel so.
I totally agree. I think Simon, of course, has represented on this before as well. I think netting, we could look at it, you know, again, the key here is to, like we keep saying, how do we balance the type 1 errors and the type 2 errors? How do we look at permitting financial netting subject to the extent that RBI is comfortable with respect to how much of, you know, do they look at it as lending to the investor, how much of the bank money would really be used or permitted to be used by RBI on that. From a SEBI perspective, is there any price volume? So when you say the current the stipulation in the regulations is that you have to trade on a give and take delivery for every single trade. So in a financial netting where you do this across stocks, so just to, of course, from an operational convenience, it is going to be a great win from the investors. How do we achieve this with minimal regulatory risk? So that is going to be a, you know, something that we should really be focusing on.
And of course, the security lending market, which
totally,
is not taken off, we need to revisit the structure, because I think it's going to become bigger and bigger world over.
Correct. I think do we have an active mechanism where we make it easy for stocks to be, you know, borrowed and lent on an ongoing basis? Certainly these are, you know, I think more like structural reforms which will shape the way how you, even shorting as a strategy, how do you really, you know, do you have a environment or an architecture where it is enabled freely? So that's probably the question that we also ask ourselves on this. Yes, Simon. Anything else here?
That's great. Kaku, thank you for mentioning those points. They were definitely on my list of things that I think are incredibly important. And I also like to kind of take a step back in terms of like how we get things done in India as well. I mean, I know the earlier panel we were talking about T+1 and what the achievement was in a year to kind of get that done. And I think one of the achievements was why it was successful is because the market really thought about what red lines it wanted and effectively what it needed to solve for in order to get a solution in place. And I think the important thing is also from an FPI perspective, and I certainly try to ensure that the rest of the community understands that it's not just about FPIs, it is about everybody who's involved in the ecosystem in terms of trying to find some the right solutions that are necessary. Just one second. So, I mean, Indian market derivatives, the busiest market in the world, absolutely huge, but we don't see much. We don't see, you know, the same level of liquidity come into the cash market. And at the end of the day, going back to my first point, we're trying to grow markets, you know, to ultimately help people invest for the future, retirement, and the like. So we need our companies to want to list, have good liquidity, have low cost of capital. So these are the type of things we need to think about. So Kaku mentioned, you know, trade netting as one way to kind of make it more efficient for, well, not just FPIs, but also domestic institutions as well. I know they don't have the FX component, but that's an important aspect of it. The SPL aspect is super important. One of the reasons why people are so active in the derivatives market is because obviously the cost of trading and must be lower because otherwise it wouldn't be so active, and the ability to participate, right? So let's try and find solutions to allow SPL to work and people to, you know, market makers and arbitrage funds to be able to create and transfer the liquidity into our market. I mean, I think the initiatives that we saw in the latter years around T+0, I think they're all very well intended. I've talked quite a lot about the bifurcation of the market not being ideal. But I do wish to see this market continue with the T+0 journey and ultimately instantaneous settlement as well, of course, as other markets do it. But all that is really a flexibility around funding. It doesn't, what we want to try to avoid is upsetting and fragmenting the main markets that we have. So we've got a lot of ideas. We need to continue with those ideas. Common Contract Note was an excellent level playing field initiative, and great to have that done. But even with all the MIs in the ecosystem, we probably need to think about a roadmap around further standardization of how they all communicate in order to kind of get the next level of innovation and support for the market. I don't know that area well, and there's plenty of experts around that do know that very well, but I'm sure that so much has been done in order to remove 22 hours or so from the T+2 to T+1 process, but we're probably at the limits of where we can get. We need to think about that for the future. And obviously with SPL, in order to kind of make that effective, I can't see that we're going to move away from a margin and collateral-based structure. I mean, that's a sensible initiative, but obviously thinking about blockchain and how we can get quicker and more instantaneous margining available is clearly going to help with liquidity and those type of assets. So let's think about those type of things. I think we've set some great seeds to think about, and I never come away from a conversation in India without another idea. So may it continue.
Sure. Thank you. Very, very crucial points, Simon. I think we have a lot of suggestions for structural reforms. The way we look at it, these are debates that we have again with respect to what can we do to strengthen the liquidity in the cash market, and how do we really have an ecosystem where all strategies, long, short, everyone is able to hedging. How is everyone able to take their calls in a seamless and with less cost of operation, really able to achieve it? Janak, any closing remarks from you?
I know we run out of time, but it just popped up.
It's just about time's up, yeah. But
I mean, I'll be amiss if we don't mention Fintech in this. So, as we are a Fintech festival, the next phase for use of technological advances like Fintech, needs to be adopted and promoted for the transformation of our capital markets. I mean, examples like like Kaku mentioned, new financial products within our regular framework for investor protection, tokenization of assets. It's very important, especially the alternative asset classes like commodities, to increase wider participation of retail and institutional investors for both domestic and foreign. And usage of DLT, I know this was mentioned in another session earlier, so I'm stealing that line. Usage of DLT in settlements, KYC, enforcement of regulations, and protection of investors against market manipulation near real time. So, that will actually help us to get what we want to get more FPIs to invest into the country, help us achieve the goal of 2047, maybe sooner than 2047.
Sure.
Thank you.
Thank you. Thank you so much. Thanks a lot, everyone. I think it's just about time. Thank you so much for all your very useful insights and views. Thanks a lot. Thank you.
Thank you so very much, ladies and gentlemen, for that fabulous, insightful session. I invite you to kindly step forward for the group photograph. And with that, ladies and gentlemen, we conclude with all our sessions today. With this session, I'd like to thank Mr. Janak Dalal, Ms. Kaku Nakhate, Mr. Simon Williams, and Ms. Aparna Thyagarajan so very much for their insightful discussions.